Oh, bloody minus. What's bloody... Oh, I'm changing my sitting stance each day.
Get comfortable, mate.
I'm bloody comfy. Love the setup. What have we got? What's happening today? Latin, up the resource.
That's it. We got 4 good stories. Latin Resources up in the resource estimate. Boss, they are rattling the 10 and making an acquisition, so we'll make a quick comment on them.
Need a big 10 for how much they're putting in it.
Yeah, and Blackstone Minerals, they have announced that they've got an option to buy a Canadian nickel asset, which we'll get into. And then, Trav,
Trav's got a rant.
He's gone deep on the Vanadium merger.
It's the deal of the year, and, I just want to go into it. I know how much you love Vanadium. I know how much you just care about the most logical merger.
Near and dear to all our hearts.
We might lose potential sponsorships out of this rant.
Nah.
Maybe.
No. It's in the weeds. Go really in the weeds. There's a lot there. There's a bit of shareholder activism. There's some technicalities with independent expert reports that I just want to hash out with the audience.
Oh, look forward to it. Right, have we got the Instagram shit trade winner?
We do. We will reveal who's won tomorrow.
Tomorrow.
Yeah.
I think the tickets are getting sent out to the winner
today.
The Savi.
That's right.
So they'll have. It's like going to an awards night and being told you're going to win already, which we didn't.
I'm not familiar with that feeling.
There's a bloody hint. Rightio, boys. All this underground mining training I've been giving you is in exchange for a lot of financial modelling and training coming back at me. Appreciate it.
We're all learning from each other, mate.
Appreciate it, by the way. All these machines I've been showing you on the KCA website, have you got a favourite? What really strikes your attention of what's a bloody good underground machine?
Mate, you can't.
We established last week they don't have jumbos and boggers, JD, like you were advertising.
You didn't say
They've actually got
KCA though. My favourite is the jumbo.
They got they've been getting inquiries for boggers and jumbos because you were plugging them.
Well,
but they're looking for boggers.
I had the privilege of meeting Adam and Brenton last week at our sponsors drinks.
GCs.
Absolutely, and what he told me was they'll get the call. They'll get the equipment. So whatever you want, just give them a call and they'll source it.
What a bloody slogan. And they've got a lot of machines that can get towed up easily. So just an easy swap in and out. It's pretty much KCA you would consider the Bunnings for underground mining machinery. Just rock up on a Saturday. Oh, mate, nothing like a bloody snag sizzle in a truck or an IT. Bloody easy as that. KCA, just sorting out the underground mining environment. IT's trucks, bloody water truck, the grader. Flatbed for surface, flatbed for the underground, the normal one. Bloody charge rigs if you accidentally blow one up, which could possibly happen. KCA will just send one up. It's like it never really happened. So,
if you get to the situation where you need something like that and you pick up the phone and you don't call KCA.
Well, if you're picking up,
but the people that pick up the phone and they call someone else other than KCA, they suck.
To be honest, I don't even know if there's anyone else to call.
Yeah.
Not even Ghostbusters. It's mate, it's just the absolute household name.
Who are you going to call?
Off the top of my head, I wouldn't know who to call. I think they're that good. The competition's just gone missing. So
you wouldn't have to think about it.
Nah. It's like Red Bull and Band-Aid. Just a generic name. No one has V.
Nah.
No, I don't even know. Oh, there's a Elastoplast, but like KCA have just become that machinery hire Band-Aid because they fix your problems.
Mm-hmm.
Yeah.
Popped up out of nowhere and just did it.
Unbelievable. And they can bloody send people. They farm them.
They farm the people.
Yeah, genetically create underground miners suitable for the environment.
That explains the competitive advantage.
So they've sort of taken labour hire and recruitment to a new level by creating their own fit for purpose. So, yeah, first time I've seen it in the industry.
Wow. Cool KCA.
I've been around too. So back in my day, we didn't have that.
If KCA are the Bunnings, the competition are like what was the one that popped up that just closed up? That blue one.
Masters.
If competition of Masters.
Yeah, KCA, Bunnings, human genetic manipulation, bloody whatever. They do everything. Right, cheers KCA. Love your bloody work. Give them a buzz. Call KCA. Simple as that. Righto. So we've got some bad news for the money miners. We're very sorry to tell you, but the Jeremy Bond tell-all has been postponed till 2024. We had him in the calendar. Bondy is obviously going to some event, some probably high-profile event that they'd normally charge 50 grand for a speaker, but Bondy does it for free. He's that sort of guy.
People's person.
He gives back. He's given back to the financial community, like what they do for us. So he unfortunately had to push us aside for some philanthropic work. Like he's pretty much at the same level as Tattarang with
Hearts and Minds.
with his what he does for charity and everything. So it's pretty I'm devastated. So should we just do an episode where we just talk about Bondy for the whole thing?
Did you see
I reckon I could do that.
Did you see what my idea was to
Everyone send us in their best Bondy story that's related to the finance industry.
He was a big fan
obviously.
of that idea, I think.
Yeah.
Yeah.
and we'll read them all out.
Shout out to any friends of Bondy if you want to feature in the Bondy tell-all episode that Bondy might not be in. Send in your Bondy stories. But while Bondy's not being at the level of Bill Gates and charitable donations and he actually invests in natural resources as well. We better not discount that, AJD.
Terra Capital.
But then because he does so
wondering.
much for the world and like gives so much back, like I think people probably forget how much of a gun trader he is in funds management. So yeah, I don't know. It's just it's a bit of a curse that old Bondy has, isn't it? Yeah.
Do you reckon Bondy would bid up GC007 in the raffle tomorrow?
Or
It's the
Bondy?
surname, yeah, you know.
Never thought of that. He's a logical acquirer of it.
Yeah, he is, isn't he? Maybe we should get a silent bid from him.
Well, you think of how much he gives away to charity.
We are
How
basically
much do you
charity.
reckon he'd give us for GC007? Talk about putting the coin to good use. I might spend it all that night, Bondy, just letting you know. But Bondy, if you want to dial in for GC007, give us a buzz. And and we have been talking about Terra Capital. You mightn't know it, but
Experts in the natural resource world.
experts in the natural resource world and absolute philanthropists. So legends. Cheers for the support. Let's get into it, JD.
On that note.
Speaking of big things around the world, Latin Resources, update to their mineral resource estimate. They've got the Salinas deposit in Brazil.
Yes, so they've got the Salinas lithium project and the flagship deposit is the Salinas, the cleaner one within that project. So,
Hard one to get the right way around every time. Always fuck
mate,
up.
you got there close enough.
Yeah.
So they kept it $500 million. They're no small company anymore. Although if you look at the share price, they've had a tough past 3 or so months, like the majority of the lithium stocks out there. The market is liking the resource upgrade today. Though last time I looked, they were up about 15%, sort of stemming the flow in which lithium stocks have been going. In particular in the last week, they've been hurting quite a bit.
God, what's Linetown's back into the $20s? Well, that gives you an indication where everything's at.
Yeah, sort of reflective of hydroxide, carbonate, and spodumene prices. The way they've all been pulling back quite quickly.
But that spodumene price seems to be sitting at around that 1,400 still. It hasn't moved all week, but it must be the actual hydroxide prices and everything this week, has it?
Yeah, and these are obviously not the most liquid, most that were the best quoted prices that we're sort of seeing. They're kind of irregular and patchy how this sort of trading data comes through.
Is that because it's got to wait for a contract to be executed or something before they get the updated price and they're not as frequent? Is that why?
Yeah, and I'd imagine these groups that put out the data for lithium prices might not have access to the deals that every bit of offtake is struck on. That might be data that the partners, the miner and the plant that it goes to keep internal. So it's something it's an issue in the lithium world, just like it was in iron ore, 15, 20 years ago. And as the market grew, it got more and more transparent. So the announcement today, guys, like I said, they've upgraded the Salinas lithium project resource. So 56% increase is the headline number that they flash up. It now sits at 70 million tonnes at 1.27% lithium. So 58% of that resource sits within the measured and indicated category. And like you said, Matty, the Kalina deposit, the sort of flagship deposit there, The resource on that jumped 41%, so that now sits at 64 million tonnes at 1.3%. So
It's not a bad grade considering what we're seeing come through these days. 1.3s are
yeah, it's not bad
pretty
at all.
good. Everything's drifting back toward ones.
Yeah, and obviously we should mention this is a hard rock project. People often think South America brine, but this is in Brazil, so it's not
It's
on
like
not on the salt flat.
Sigma version 2 in a way.
Yeah, it's not too far from Sigma. So there was a number that stood out in the announcement today. They are going to put 16 drill rigs on the ground from January. So I had to read that a couple of times to make sure I was reading it right. That's an enormous number of drill rigs.
Jeez,
They,
it's going to be like Swiss cheese.
2.0.
2.0.
So people that follow the company, they would have seen a few months back now that they came out with the PEA, the Preliminary Economic Assessment. And in the announcement today, they flagged that the DFS is targeted for mid-2024. So they raised $35 million in October of this year, and that left them with 65 all up. So in an environment where lithium stocks are getting beaten up quite a bit, they're well placed in terms of cash in the bank. And, you know, with how many drill rigs they've got on the site there, I'm sure we're going to be chatting about them quite a bit in the months to come.
What do you think about on the M&A front, JD, for Latin specifically, because Sigma effectively put themselves up for sale?
They did in quite a bizarre way. So, I mean, they also put a timeline on that at Sigma, and they wanted that to be done by the end of the year. And we're in the beginning of December now, so that is a tight timeline.
Because it's like you'd think, would there be a logical merger or something between them? But I suppose someone mopping both of them up would be pretty difficult, being they're two separate companies. It's just like, right, what is the actual pipeline for this to start breaking rocks?
Yeah, two different companies at, you know, quite differing stages. Sigma is mining now, and you know, we're talking about a company that's still targeting to get a DFS out in over half a year's time.
16 rigs will help you get there faster.
Sure will, but in terms of, you know, permitting and all that sort of stuff, it's quite hard to speed all that up. So we'd see what the actual synergies, you know, Brazil's a massive country. I know the projects are relatively close together, but whether there's actual any synergistic benefit, an acquirer would have to study up.
Sensational, right? Talk about boss with the bosses of mining news. Trav and JD. Boss G, talk about shaking the shit out of a tin, $200.
Yeah, for a company that didn't really need the cash. So we saw this come
Best time to raise.
Best time to raise.
When you don't need it.
Absolutely, Matty. So $200, they're about a $1.5 billion company as of yesterday. So up 105% roughly year to date. They're the best performing uranium stock.
And that's pretty impressive, even though the uranium price has gone up so much, but they're on that part of the Lassonde curve going into production and everything. So
absolutely,
to perform in that stage that well is pretty impressive.
Are they the best even compared to like the micro caps, or is that like a certain lower bound threshold there?
JD wouldn't have looked at the micro caps.
That was pick of the bunch out of, you know, 20 odd uranium stocks out there. So they've performed very, very strongly, like you say, Matty, in a particularly tough time at the restart of Honeymoon, their project. So it's interesting when you look at their performance, just how strong it's been. You get some brokers that have even upgraded their or they've increased their price targets while simultaneously downgrading the stock maybe from a buy to a hold or a hold to a sell, just because of how far that stock price has run. Just gives you a real indication, and it's through no real fault of the company. So yeah, it hasn't been reported by the company how much they're raising or anything like that. We're going off reports that we'd seen in Street Talk and other news providers, but looks like they're raising $200 million, and they did say in their trading halt announcement that they are making a material acquisition, which is, you know, I mean, I don't think we have spoken about a company making a material acquisition in the month roughly in which they are going from construction into ramp up. So
yeah, and haven't seen anything else in trading halt, so it's kind of a bit curious to see what they're buying. It's a big dollar number they're raising. You sort of see that and you think, are they being opportunistic? Because they kind of internally might think that they themselves are actually overvalued, so they're making use of their overvalued scrip at an opportune time and becoming bulletproof in the process. But looks like they've got a use of funds that's tied to an acquisition of some sort, which we just don't know what it is yet.
Any thoughts on what it could possibly be?
I have none. I looked through what else was in a trading halt. There was one other uranium company in a trading halt, but that just didn't stack up well at all.
What was it?
ELA.
I mean, they were raising money themselves. That's why they're involved.
Yeah, they're raising them today.
Yeah. So in terms of how the company's shaped up in a financial sense at the moment, they don't have any debt. Again, quite unusual for a company in the phase in which they're at. So yeah, with $63 million cash prior to the raising, we'll see how they go about allocating that. I'm sure we'll be speaking about it tomorrow when they announce the acquisition. There was one other comment I wanted to make on Boss Energy, and that they came out recently and said they're going to be included in the ASX 200. And Matty, I know you're a big fan of the flow of funds and passive flows.
It's all about the flow of money, Loggy. You know, when it starts flowing from the US to Oz, it's just flow of money.
That's it. So
I should run morning meetings.
Jokes aside, being included in the ASX is a serious tailwind. You get a lot of passive money, you know, all these ETFs that have to buy up. I think we spoke about this.
Gets a bit of a kick usually, doesn't it?
Yeah, I think we spoke about it with Guy Keller previously about these uranium companies trying to achieve scale. We've spoken about it with previous uranium companies merging to get that scale so that when people look to allocate to uranium, they are the company that they pick. So another good tailwind for the company, and I'm sure we'll be speaking about the acquisition in no time at all.
Do you think it could be something that is not a uranium mine? Like some downstream
Sort of,
or some uranium service provider, or God, it could be another commodity. But are we set on it being a uranium mine?
I have no insight.
Yeah. Keep in mind, Boss is it's that in situ leaching dynamic as well. So my bet would be a project analogous to theirs. I just don't know what those projects are. I don't have a good read.
Well, we'll wait and see.
We will.
Love this shit. So good. Right. Blackstone. Yesterday they come out with an option to buy a nickel asset. Talk about a good counter-cyclical time to buy a nickel asset, because nickel is probably, I would have to say, it would be the most out of flavour commodity right now, or one of them.
Yeah, pick of the bunch out of a really, beaten up few commodities. I think nickel.
Nickel sulfide is the most out of flavour at the moment with all this Indonesian supply coming on.
You're dead right, and that's what they've got an option to buy, a nickel sulfide project. So Blackstone are in the background working on a DFS for a downstream facility and a mine that they have in Vietnam.
Yeah, they released a scoping study sort of, I think it was a few years ago, and then they were up near 70 cents, and then the CapEx number that come out just sent them back down to where they are today, and they've never recovered really.
Yeah, so the project they are looking to potentially acquire is the Woboden nickel project in Canada. So it sort of indicates that there could be a real shift in strategy going on at the company. Getting access to the feedstock, if they do decide to buy this, would reduce the reliance on third parties for the refinery that they are looking to develop in Vietnam. So that sort of explains the strategy behind what they're doing here.
Previously they were going to need to source additional feed from anywhere. Could have been bloody BHP in Australia, like to fill that plant.
Yeah,
so.
Exactly. They have stakes in a number of smaller nickel companies, but none of them were, close to production. So exactly right. They'd be having to source third-party feedstock from somewhere. So let's get into what the project they've got the option to buy is. It's the Woboden nickel sulfide project in Manitoba, which is the central state in Canada. So it's got a resource of 230 million tonnes at 0.56% nickel. That sort of sits across 5 different deposits there. So Scotty Williamson, the managing director, really underscored that, it's got this big resource already, but they really want to drill it out further. Bucko, which is the main deposit, was mined for 3 years between 2009 and 2012, but nothing much has happened at the site since 2012. In terms of infrastructure, they've got a concentrator with a capacity for 364,000 tonnes per annum and a new paste plant that was built by 2012 and never commissioned. So a bit of infrastructure, they've got a few other bits and pieces, comminution circuit, all of that, camp and stuff that, are pretty unused, but they have been sitting there for over a decade now.
It shows it's another example of these North American assets that they've got existing infrastructure, but it's on such a small scale. I think they were talking in the announcement they were going to lift that up to about 1 million tonne per annum. Green Bay was another Green Bay copper project or what is it? Firefly got was another example, like
Yeah.
existing infrastructure, but very, very small.
Exactly. The comminution circuit, the crushing circuit there had capacity for 1 million tonne per annum, but obviously the concentrator, like we said, a bit over 360. So there was something else I noticed in the announcement, guys, and that was the use of the term green nickel with a little trademark on it. And straight away I thought, why?
Trademark?
The trademark. And straight away I thought, why hasn't Twiggy picked that one up? But maybe he will in future. So let's get into the deal itself. Like we said, it's the option to acquire. They haven't actually acquired the thing. They're paying 1.1 million Canadian for a 1-year option term. And then over that year, they're going to do their development studies, funding strategies, look at JVs, potential government funding, as well as any sort of royalties, all those sorts of things over the next year while they maintain the option. And then once you look at what the actual terms would be if they decide to execute it, it would be paying 20 million Canadian upfront plus another 10 million in Blackstone shares. And then 18 months later, they'd have to pay another 10. And then upon getting the project fully permitted, another 15. And then once they achieve commercial production, another 25. So all in, up to 60 million Canadian plus 10 million in BSX stock. And today yesterday they raised another $10 million to keep them above board.
You go. You're talking about the deal? I've got a comment.
Mate, I thought we just
out.
round out with our thoughts on the deal. So you go first, mate.
Oh, the thing that always stands out with these ones is when there's a time-dependent consideration to be paid. So that
You feel like it's overhang.
that 10 million, 10 bucks is a lot of money. When it's time dependent, it's not based on first production or anything like that. I know there is a approval payment as well, but like that 10 million, that's always in the back of the investor's mind. How they're going to pay for that when it comes around.
Absolutely
it's
agreed.
usually
It's just
via
like
another capital raise.
Just like Firefly, like you mentioned as well, it's a pre-revenue company.
Yeah.
How are they going to get the cash?
Yeah, so I think Firefly are only approved for their first stage had enough funds for their first stage of exploration. So you know that there's another one coming for the second stage.
Absolutely. So there were a couple other parts of the deal which I thought we'd comment on, and that's the deal structure. I don't mind it. We are. It's been very tough in nickel lately, but I kind of admire the counter-cyclical nature of this investment. They're also only putting up 1.1 million up front, so they've given themselves a bit of optionality. It's not a crazy amount of money, and granted the assets aren't of crazy quality as it sort of stands, but they do have the intention to drill it out quite a bit.
What happens in that once that time dependent payment is required and nickel sulfide hasn't recovered? Is it obligatory? It's an obligatory payment, or like if they cannot pay it, then
it's their choice if they want to exercise the right to pay.
For the 10 million in 18 months' time.
Oh, so subsequent to accepting the option?
Yeah, so you've accepted the option, then in 18 months' time and nickel sulfide hasn't recovered and is sitting at the same point we are now, and they're still on the hook for it.
Well, I'd imagine there are terms in which they have rights over something, or there's some sort of...
It's like a collateral to it.
Yeah, something of that sort of nature to guarantee that they get paid.
You imagine that if nickel's still beaten up, even kind of at the time of exercising the option in the first place, that they might not exercise it. They're paying a small amount of upfront money to get an option to have something, which is kind of a bit of a contrarian bet on a beaten up commodity.
Yeah, so this option is valid for 1 year.
Correct.
Absolutely.
So they've got 1 year to exercise it.
Yeah, that's right. I think there's something else you can kind of infer from this deal, and that might be that they're getting quite a bit of pushback from investors about Vietnam as a jurisdiction. I wouldn't be entirely surprised if they slowly move away from Vietnam entirely. They did have a comment in there relating to Vietnam's, like the refinery that they have in Vietnam is a complement. It's not a necessity to have the two together. So it could be, something that they look at in due time.
So it's a big pivot.
Yeah, it would be. So they mentioned the IRA as well, something we've spoken at length about, but they were pretty clear to stress that the asset in Canada is IRA compliant and that there would be a benefit. So
I wonder how you weigh up. It'd be interesting to hear this from a guru. Is weighing up being IRA compliant in Canada versus running an operation in Vietnam that is non-IRA compliant, but super, super cheap labour. So it's like where the trade-off is.
It ultimately comes down to whatever the cost of the project is in Canada as well versus whatever the overall cost is. And I don't even think these guys know just yet. They need to do a proper study and see what the costs would look like to operate this mine in Canada. But it's, if you are in a non-free trade agreement country and you would be competing head-to-head with the Indonesian nickel coming out. So that is tough competition, as we know. And the last comment I was just going to make is these guys are using InvestorHub, and it was super easy to actually see the speech that Scotty gave. You could post up questions and everything.
I think that's reflected in the content of the stand of the analysis, JD. The fact that you could
your engagement was higher than it normally would be for an option deal.
Utilise InvestorHub to bloody absolutely sex up the Money and Mine content.
So there's a hyperlink on the page one. You click that, and it took you to this platform.
Yeah, they chucked it on the first page of their announcement.
Oh, Scotty Williamson taking action, getting in the InvestorHub world. Now that is impressive.
The shareholders voted down the Zippo, so it's like I better engage them better.
He's like, I've got to engage with them to suck back up to them after they voted down my Zippos.
Trav, I'm itching to hear the gripes you've got to pick with the
this is a rabbit
independent expert report and everyone else you've picked a fight with along the way in this.
I love it, and I love it how this was prepared yesterday, but the rabbit hole got deeper and deeper and windier and
happens to the best of us.
We're still waiting on it. Yes, we've all been there.
Oh, mate, and this is a deal that you boys talked about when I was in London. Actually, the Australian Vanadium merging with TMT.
The world's most logical merger.
Wow.
They share the same ore body. It's like the two vanadium companies.
Unreal, isn't it?
It was the one you guys highlighted with lots of soft issues, as you had this very enlarged management team on board as a result of the merger. But the deal got done.
Yeah, it didn't look like any people were moving on at all, really. So, yeah.
Yeah. So the news is, and it was yesterday, Arvo, the scheme booklet finally landed. And so I had to flick through it. And there's a lot of unhappy TMT shareholders nonetheless. And I think they're unhappy because they think their project is contributing more to the pro forma group than is being recognised by the terms of the agreement. So what does the independent expert have to say about all this? Because that's what you can see in the scheme booklet when it comes out. They say it's not fair but reasonable. So they say it's not fair because the value in the pro forma is less than the value of a share in TMT prior to the scheme, but reasonable because of some qualitative factors outlined in the booklet. Now, remember those unhappy shareholders of TMT. They are so unhappy that a big group of them have banded together to tell the board they intend to reject the scheme.
Oh, look at the list of them.
It's massive, right? So this is a big list they chuck in the scheme booklet. It spans across like literally 2 pages.
It represents...
I did see one name, and I don't know if it's the same one. I saw William Blake. I don't know if that's Bill Blake, the 10% shareholder in Burncut. I'm not sure. I did see another William Blake online somewhere.
Just call them all out. Anyway, there's some funny ones.
It represents about 17% of the issued capital.
Yeah, like 17%. There's a big list of people there. They've all banded together and they've ultimately signed these voting intention to reject statement. And if you look through some prior announcements from TMT, TMT kind of alleged that they've all signed the same kind of thing, the same thing. So someone's gone around and kind of given out these forms for people to sign and say, I intend to reject, and they've all done it in a semi-coordinated way. ASIC has regulatory guides which are referred to within the booklet, like explicitly labelled in the booklet, specifically RG25. And RG25 deals with truth in takeovers. We've talked about this before, haven't we, guys?
Enlighten me, Rick Ardinio.
So truth in takeovers is basically you can't say, you intend to do this and then just be like, psych. you can't lie in takeovers.
You got to sort of do it.
You got to do it.
Yeah. We spoke about it just last week, I think, with OreCorp and how Goiter and the likes were intending to go.
And you can see TMT's scheme booklet basically advocating that they don't believe the full list of rejecting shareholders to be bound by their intention to vote against, and they basically state that in RG25 it explicitly states this word substantial holders as part of it, and they basically say that with the exception of one of the people on that list, these shareholders are not substantial holders for the purposes of RG25. Therefore, I think the read through is that these individuals are actually able to change their mind. They're pitching to these shareholders who said they intend to vote against and say, you're not actually bound by this truth of takeovers, we think, and you should vote for it. But look at the scheme booklet. There's all these great reasons you should vote for it. So that's how I kind of see it, as that pitch to the disgruntled retail holder to change their mind and tell them you're not bound by this truth in takeovers thing. And I think there are some parallels to Finder's Resources back in the day. And this was a takeover, I reckon it was 2018 or 19, and Hartley's basically went around getting voting intention letters signed by their clients of the stock, and the takeovers panel ultimately found that the shareholders that did sign them were not bound by the truth in takeovers rule.
This whole process just cracks me up. The Revolt, the attention, all for a logical merger where there should have just been one company that owned it anyway, and a company that requires so much bloody capital that they are going to take a very long time to get to actually break a rock. Mm-hmm. And another example of all this shit happening when there's nothing happening.
But this is the theme right now. It's like if you're a shareholder and you've been owning the stock and you're actually down, and you're thinking and then this deal comes along and you don't get the juicy premium or whatever that you had in your eyes. All of a sudden you start being really anchored to what the price used to be, and you get unhappy. And when you get unhappy, guess what? You bloody band together and you get your pitchforks and you block deals. And I think that's kind of what we're seeing here. I do think it's important to talk about the role of RCF.
Let's get into the major shareholders, because RCF been the biggest on both sides. One of the biggest on both sides, and then you've also got some other institutions there as well.
RCF owns about 18% of both TMT and AVL, and they've been pretty firm in advocating for the deal to go ahead. Logical, like you said, Matty, just from a asset combination perspective. But and in the case of RCF, they've also gone as far as there's some things in the scheme booklet that indicate RCF would be apprehensive about providing more capital if the deal didn't go ahead. So there's a little bit of an implicit threat there. Vote against, and we're not happy shareholders. So if you look at the share registry of TMT, you've got RCF 18%. If you throw in Regal, Atesa, Tribeca, that takes it up to 26%. And that 26% of institutional shareholders have provided voting intentions to support the deal. So there's 26% saying that they want to vote for it, 17% saying that they want to vote against it. When you've got such a high proportion of shareholders already kind of giving you their voting intention, if you take the rejecting shareholders at face value, and you need to get this deal over the line. You need a massive, massive voter turnout to actually kind of get this deal done. So unless some of those shareholders change their mind, I reckon it looks pretty tricky for the deal to complete in its current form. And like you guys alluded to, the bit that I really got into the weeds about is the independent experts report.
It's like an independent experts report within an independent experts report.
Yeah, is that
pretty standard?
It's pretty standard on mining deals. You have the independent expert who is responsible for the compilation of valuation and the likes, but they will often they'll employ the services of an independent technical specialist or an independent technical expert. Feeds the value of the mining properties that go into the or the oil and gas properties that go into it. In this case, but I guess before I sort of just jump on board and start supporting the disgruntled retail guys, I want to make sure they had a good point, and that's why I read the independent expert report. I've got a few gripes with it. The independent expert opines on whether the transaction is fair and reasonable. We talk about those words a lot. And they conclude, as I mentioned at the start of the segment, this one's not fair, but it is reasonable. Fairness, is it fair? That's all about relative valuation. Are shareholders getting a deal that adequately remunerates them for the value of their equity? So to assess this, the IER does their best, the IER independent expert report, it does their best to calculate the value of the assets and compare it to the value of the consideration. What are you giving up? What are you getting in return for it? In this case, the value of the asset, one share of TMT before the scheme, and the consideration, you end up with 12 shares in MergeCo. This chart here shows the range of the valuations for those two elements. You notice something when you look at these two ranges. What do you notice, guys?
They overlap.
Exactly. So I think to start with, I don't know. I can't remember ever looking at an independent expert report and seeing these two valuation ranges actually overlapping and saying it's not fair. I always thought if you got overlapping valuation ranges, then there's a reasonable scenario where it actually is fair, but apparently not. I must be wrong on that one. I can't quite figure out why.
So do they normally, if it is fair, all that green line will be within the red line?
What I've been told is one of them's got to be past the halfway point of one of them. It's just to me, that looks like there's a scenario there where this is fair according to your high and low. But we're going into like semantics on a very weirdly thing where the numbers that are spat out, I don't even kind of agree with how they've been spat out, and that's what I want to talk about. And
we will say a bit of a caveat to this. This isn't Trav's 1 hour opinion. There was some bloody work that's gone into this and deep dive. So it's not bloody shooting off the hip here.
No.
I can tell you that.
Thanks, Matty. Appreciate that.
No worries, mate. Just when all the abuse starts flying in, we've got the disclaimer.
So BDO, they're the author of the IER, but valuing, they rely on the technical specialist report to value the vanadium mineral assets. And the technical specialist report has been prepared by VRM. So let's see what the technical expert VRM did to value TMT's mineral assets. Do they look at the economic viability of the deposit and wrap a mine plan around it? Nope. They use transaction comps of precedent vanadium transactions on an EV to resource basis. And when I say transaction comp, what do I mean? I'm talking about the very few occasions a vanadium project with a resource has transacted in recent history. The technical expert has looked at what was paid, looked at the tons of resource in the ground, and then normalised the amount paid for the changes in spot prices to vanadium pentoxide at the time of the transaction.
So they've looked at 2 transactions that happened in Nevada, 2 in Finland, and 1 project in the northwest state of South Africa. And from that, they come up with $1, I think it was at $67 per tonne of how they're going to evaluate what the TMT's asset is worth based on their contained mineral resource.
Yeah.
It's kind of bizarre because these transactions go back almost 10 years and commodity prices fluctuate wildly. So
and
they
did
normalise. Well, I don't actually think it's appropriate to normalise for changes in commodity prices because it's all about the margin you make on the in situ thing, not just like anyway. It's like another
they try and
yeah
justify it, obviously.
And there was a line in there that said, I think it was the South African asset. It was the only one that had an ore reserve and similar environmental conditions, and it come out at 63. So that shows that we're close. Like that was one of the lines. So just so it, as you said, first pass looking at it, it just seems like a
blunt stick,
easy way to do it.
It's a blunt stick. It's a weird. Yeah, Chucky summarises it best. He goes, from my rabbit hole analysis, the main driver of TMT's valuation is 5 transactions dating back to 2014 supported by a rubbery guesstimate of the in-ground value of the vanadium. That's worthy of a revolt. So thanks, Chucky. Appreciate that. And my gripe...
Well, there was a line here, and you'll be able to explain this to me. The VRM does not consider a DCF approach to be appropriate. This was because a DCF valuation results in a lower valuation than the market-based assessment.
Yeah, market-based being share prices, etc. I think the reality is like, what are you actually getting? Like if you do a DCF at consensus prices, that makes sense. But the reason you buy these companies, you're not paying for the unrisked NPV. You're actually paying for the option value that there's a structural change in vanadium prices. So I think you could be a little bit thoughtful about using some option valuation to go into your actual quantitative methods here and get a supportive valuation range. But that's neither here nor there on this one because they've chosen the rough stick and we'll roll with that one. So my gripe doesn't stop there at the fact there's just these 5 comps. It's the fact that there's transaction comps, and we all know what a transaction is. It's a change of control, right? So
which has a premium.
Has a control premium baked into it. So keep that in mind. I'm going to try my best not to lose the audience as I talk about valuation methodologies here. And if you recall that valuation range chart that I showed where the two ranges are sort of overlapping a little bit, it compares one TMT share with 12 shares in the merged entity based on sum of the parts valuation methodology. So to start with, TMT, the value of TMT, that's based on the value of the mineral assets, which comes from that EV resource metric you mentioned. You adjust it for some net cash and transaction costs, and then you get a kind of a per share value. Fair enough. That sounds like a reasonable way to do TMT if you're going to adopt this, this blunt stick EV to resource metric to value.
Just before you do it, and I'll zoom in on Chucky's tweet, and if you just look at the range of the prices, like they have averaged it, but the range goes from $28 a tonne up to $91 a tonne, like for all those 5 projects. And this was in 2014.
Heaps of variance.
So so much variance in how that is calculated. Sorry, Trav, keep going.
That's all right, mate. We've probably got like 3 people left listening anyway.
That's all right. Hold on, because this is sensational stuff, money miners. Hang on to your seats. Take it away, Trav.
All right. Okay. So I think that's a fair way to value TMT if you think it's appropriate to use the EV to resource, which I probably don't. But now look at how they value the 12 shares in MergeCo. So they value in the sum of the parts build up. They use the value of TMT, which we just calculated in that above methodology. They repeat that same methodology to value AVL. They chuck in some minor uplift for synergies. And this is
But that only went to the TMT side, didn't it? I think there was 11 million uplift for TMT.
Yep.
Based on, I think, something
synergies,
because of their pit went to the edge of it or something. But AVL didn't get an uplift. I think it was just TMT.
Yep. And then here's the bit that perplexes me. They discount the entire, everything you just calculated in that sum of the parts, so then discount the whole lot of it, between 20 and 26% to remove a control premium.
That sounds familiar. We've heard this. This is when William Beament was going off his head in the newspaper because the exact same thing happened for the Develop Essential merger.
Yeah, and in the Develop Essential merger case, it was a bit more extreme in some ways. I mean, BDO's methodology suggested Develop was only worth $1.70 despite the fact they raised $50 million at $3.20 at the same time the transaction was announced. And how did they get to the $1.70? Well, I mean, this is kind of the issue is they're applying this control discount to the entire pro forma. So if it's all coming from this place of we need to remove the we need to remove the element of the control from the target. Well, you don't bloody penalise the bidder in the process. You can deduct the control based on TMT, but what they're doing is they're actually applying it to the entire AVL, which doesn't make any sense to me. And I mean, like BDO did the IER for DDH Parenti recently with no discount applied to the value of the merged entity. You can go like back in time through a bunch, and the typical way that these things are done, you don't actually value assets on an EV to resource very often. Like it's a bit of a strange thing to inform the sum of the parts for a lot of mergers, I would have thought. But the typical thing you do is you do reference sort of relative share prices. If the company is too small, then it becomes a bit trickier and you use these sum of the parts. But, what do you use the transaction multiple to do? It's to help you figure out what an appropriate control premium is. Once you know what that appropriate control premium is, you then apply that based on the market considerations of the share price of the, pre-bid. And it's a really funny kind of process to go through, I think, because you end up kind of, making a deduction to AVL for control, which it's never actually like losing in the first place. I don't quite understand it, just from a conceptual level there.
Because you look at the definition here. However, if the scheme is approved, shareholders will be minority holders in the proposed merge entity, meaning their individual holding would not be considered significant enough to have an individual influence in the operations of that company.
Yeah, I mean, so I can talk to you about.
But the fact that they're all coming together, though, mate, is it a reflection of they're not getting rid of everyone and there's all the same management is merging together as well? So imagine maybe if there wasn't as many soft issues, there wouldn't be the minority discount.
I've got a couple more examples to sort of talk through my line of thinking. If you go through the St. Barbara Bardock scheme booklet, what RSM do is they first work out a control value for Bardock, and then they compare that to the implied value of the St. Barbara share price, which is the most logical way to do it, I would have thought. And then another example, if you go back to 2020 when Perseus bought Exore, BDO did the report in that one. They worked out a control premium for Exore and then compared it to Perseus' share price. So I just think conceptually you shouldn't be penalising the acquirer's portion of a pro forma entity with a controlled discount. It just makes no sense to me when you've got that other example where you're doing this other analysis and you absolutely don't adjust for a control discount on the acquirer. So anyway, I think what's probably going to happen here is someone from BDO is going to call me up and come on the show and and argue the other side of the perspective, Matty. But I'll look forward to that one.
It'd be all well and good if everyone had this opinion, but everyone doesn't. There is a lot of mixed views on this that we've heard from people you'd call that are in the funds management world that we respect. So
get plenty of help. All right, mate. So
what ultimately?
So what would have happened? So if that uplifts, so if they didn't apply that minority discount, TMT shareholders should be getting more AVL shares effectively.
You would have actually seen the two valuation ranges actually kind of overlap, and I think you would have seen a fair and reasonable result.
But it wouldn't have changed the actual scheme?
Well, I mean, the bid was put in yonks ago. This is just the independent experts report. But in terms of getting a deal done, it's probably would have been easier for both parties to argue to their shareholders, saying that it's fair and reasonable. But the revolting shareholders kind of have a bit more capability to argue for an uplift, given it's deemed not fair.
So the independent experts report is at the detriment of AVL and TMT.
In the detriment of getting a deal done on the current terms, I probably think the likely outcome here is you get an uplift of some sort from AVL. Will it actually appease the shareholders? I mean, they seem pretty unhappy, so I don't know if you can get an uplift that keeps them happy.
But that's what they're after.
Yeah. But I mean, like, realistically, how much of an uplift are you going to get? I mean, you're still going to be super anchored to the glory days when the share price is way higher than any uplift you're actually going to get. So
enough to move that line over.
Yeah, who knows? I mean, to me, this is a merger of like necessity as much as anything else. People be unhappy as hell, but I mean, the whole world knows these two assets should be together. The question is, at what price and who ends up with what percentage of the pro forma, and I think that's still TBD.
And there is so much that has to change in the world for assets like this to actually break a rock one day. Can you imagine how hard it is for a company to get well over $1 billion in CapEx to develop something like this in this climate?
Yeah,
it just feels a long way away.
You're betting on a structural change in vanadium. Yeah, totally.
Yeah. JD.
I mean, in any case, you'd want to do that before the commodity price picks up, but counter-cyclical investing is much easier said than done.
Especially on that size.
Absolutely. Geez, we really delved into it there, guys.
We did indeed.
Love it. Good work, Trav. Look forward to the correspondence. It's just a fair. I believe I didn't go as deep as you, Trav, but it is a bloody fair question that we would like. I want just a simple answer to.
Yeah. Anyway, BDO, you're welcome to come on the podcast tomorrow if you want to.
Yeah. Oh, not tomorrow. We're busy. We've got the event. Anyway.
Next week.
Oh, mate, if you want. Yeah, right. That'd be it, eh?
A couple partners to thank before we get to some work.
More than a couple, JD. If there was
do.
only a couple, that would mean we're not as popular as we are.
I'll give you the privilege of rattling off all the partners then, mate.
Jeez, thanks, JD, mate. InvestorHub. Another example today why you should get onto InvestorHub if you're an MD. DSI Underground, Terra Capital. What a charitable organisation. McMahon Mining Title Services, Future Proof Consulting, Anytime Exploration Services, KCA Site Services, Brooks Airways, and the Rock Breakers with hands. Catering.
Hoodaroo.
Can't wait to have a beer with you tomorrow night.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.